What's up, everyone? It's Caddy with MoneyVest. So welcome on board for another inflation live stream. So if you guys can see me and hear me, just give me a thumbs up and we should be all set. Just want to make sure the audio and the video is working well. Gabrielle, welcome on board. Thank you so much. And we've got about 40 votes right now for inflation numbers, more specifically for core inflation. That is going to be very important. That's going to be coming out in now under 30 minutes. So at 8:30 a.m. Eastern. The inflation numbers are going to be coming out over in the US. So just please let me know in the chat if the audio and the video is working well, and we should be all set and good to go. So this right here is going to be the markets. Of course, pre-market, we have seen a lot of momentum to the upside over the last several weeks. So S&P 500, the NASDAQ, the Dow, the Russell 2000, they've all continued to push higher to new all-time highs. NASDAQ is still a little ways away from its all-time highs, but the S&P, the Dow continue to rally harder and harder. We're seeing a bit of a pullback pre-market, so SPY is back under 500. The NASDAQ, which is QQQs, are also down about 69 basis points right now. And of course, we've got the Dow Jones pushing back a little bit as well. So DIA, it is going to be down about 13 basis points with the 10-year yields back over 4.1.5%, so down about 36 basis points at the moment. So should be all set and good to go. Morning, Master Jedi Caddy. Good morning, crew. Can see you. Everything is well. Perfect. Where are you? So I'm back in India right now, just visiting my family, friends, and we'll be traveling back to Dubai towards the last week of February. Then we'll be back at my original setup. Right now, it is going to be a little bit more shaky. You've got a lamp that I'm using as lighting, so it's not going to be the best, but we're going to make it work. And again, inflation numbers, super important. Actually, wait a minute. What time is it over in the US? Hold on 1 minute. Did I go early? Did I go live super early? I just want to see what time is it right now. Oh, it is 7:30. It's 7:30 right now? I was supposed to go live at 8 a.m. It's only 7:30 Eastern. Okay. We've got an hour to kill. That's fine. I'm going to break down some stocks for all of you. Fundamental technical analysis. We'll go over some of the expectations. I genuinely thought it was 8 a.m. over in the US. Okay, so I was supposed to go live at 6:30, not 6 p.m. my time. Anyway, yeah, quite a dramatic overnight pullback for no news. So we're seeing not really dramatic, I would say just a reasonable pullback with the NASDAQ here dropping 72 basis points. We've got the SPY down about 38. And if you take a look at some individual stocks, so for example, Apple is down 60 basis points. NVIDIA, NVIDIA has just been one of the strongest stocks out there. The momentum's been incredibly strong for NVIDIA, hitting new all-time highs at well over $720. Then, of course, you got Tesla here dropping almost 1%. Amazon's down a little bit over 1%. So we're seeing a slight pullback here for the markets here. Yeah, so it's 7:37 a.m. Eastern. Inflation numbers come out at 8:30 a.m. Eastern. I honestly thought that 6 p.m. my time was actually going to be 8 a.m. Eastern, but it is indeed 7:30. So I am an hour early for inflation numbers. Yeah, have an hour till 8:30. Yeah, that's what I was thinking as well, Rod. I completely lost track of time. But that's okay. I mean, that's going to give us plenty of time to prepare for the inflation numbers, and I can also go over individual stocks for all of you. So if there's any companies, there's any stocks you want me to break down, I'm happy to go over. And of course, we can talk all about macroeconomics. We can talk all about, the markets, the economy, all these different things that are super important. And the market's reaction, of course, we'll see what that looks like after the numbers come out as well. InMode looks like they reported earnings pre-market as they always do. They're down about 9% right now to $24. Resistance at around 26, 27. We can take a look at InMode's earnings as well. Right now, it doesn't show us exactly what they reported, but there's a possibility that InMode reported numbers that, let's take a look. So EPS came in at 71 cents. Looked like they beat on EPS versus revenue of 67. And fourth quarter, 64 cents, revenue of 126 million. So this right here are the numbers. You can see quarterly revenues of 126 million compared to 133 million in the fourth quarter of 22. We got quarterly revenues from consumables and services of 20 million, an increase of 20%. And we got total cash position of $741 million. And the entire year, we're looking at record full year revenue of just under $500 million, increase of 8%. Record GAAP net income of just under 200 million compared to 161 million same time last year, and non-GAAP net income of 221 million compared to 207 million. 18% increase in international non-US revenues. The balance sheets again been absolutely phenomenal for the company, and outlook wise they see revenue between 495 and 505. I think that's really why the stock price is down, because the guidance was not that good, because they're for the entire year of 2024 they're looking at only 495 to 505 million dollars. That's actually on par with the revenues that they just reported at 492 million dollars. So there's not a lot of growth baked into the 2024 guidance, and that's one of the reasons why I believe the stock price is down a little bit over 9% pre-market. Now, earnings wise, they expect 253 to 257. So this is an incredibly cheap stock, because if you take a look at the price right now, let's just take 255 as a mid guidance. Right now it's trading at 24.50. So 24.50 divided by 255, we're looking at a 9.6 times earnings multiple, or said another way, this divided by 24.50, that's an earnings yield of over 10.4%. So with InMode, we're getting a 10.4% earnings yield with one of the best balance sheets out there. The only concern with InMode has always been the subscription business model, right? I mean, it's a very capital intensive business where a lot of cosmetic clinics, surgeons, hospitals, like they need to actually buy the equipment that they're selling. And for that very reason, there's no recurring business, there's no stickiness to the business model itself. And that's the concern, that can the company continue to grow its revenues, or is this going to be more or less stabilized, and what's going to be the future for InMode, right? That's the big question mark for this company. But nonetheless, I think, valuation wise, super cheap, balance sheet's excellent, management's doing everything they can. They've got one of the best gross margins in the industry. So support level is going to stay up roughly in the $19 to $20 range. I think that's a price point where InMode becomes a very good no-brainer buy, because if you take a look at $19, right? Even if you do $20, so 20 divided by 255, we're looking at 7.8, under 8 times earnings. And that's, on an earnings yield basis, about 12.5% earnings yield. Like, where are you getting a 12.5% earnings yield for one of the best balance sheets out there? So the bankruptcy risk is really low. So, in my opinion, I think InMode is a good potential opportunity in that $19 to $20 range. But right now, of course, it's just been ripping higher for 4 to 5 consecutive weeks. I mean, it's rallied a little bit over 28, 29% on the daily time frame. It is getting up to that overbought level. So you can see the RSI MACD being overbought. So I wouldn't be surprised, of course, the pre-market selling off here, but support level is going to stay put in the 20s to low 19s. So welcome on board, everyone. Thank you so much for joining. Please take a look at IWM. I'll take a look at IWM. I'll take a look at Shopify as well. Let's see, ICP. We'll talk about that as well. Nikola. I read BLS leaked the CPI already, 2.9% year over year and 3.8% excluding food and energy. Well, if they did, and if those were the numbers, 3.8, which is a little bit higher than what the expectations are, what the consensus is, then of course the market's reaction is not going to be super great. But I do like, is that something that you saw on Twitter, Bass? Like, is that something that you saw on Twitter? Because if you did, then there's a lot of fake, reports getting leaked. People edit the previous BLS report and they try to make it seem like it's real and legitimate, even though it's not. So I'd be super careful and cautious with what you see on Twitter, unless it's a verified source. And I doubt that the BLS is going to do this where they accidentally leak the CPI report. So I don't think that's the case, unless, of course, you're getting it from a legitimate source, whether it's a news reporting website or an actual company like CNBC or something. Other than that, I think if it's just a user on Twitter, then we've been through that before. Like, that's happened before, where some people just kind of leak it on Twitter to make it seem like it's real, and the markets kind of move on that news, even though it's not the actual report. Anyway, so the consensus for core inflation is 3.7, and that's really going to be our poll. So right now, for the poll that we have going on, 120 votes. Make sure that you do participate, so definitely do check out the poll here. If you're watching it from your phone or your computer, whatever, there should be a poll that's available. What do you expect for core inflation? So core CPI, do you expect it to be at consensus of 3.7, below 3.7, or above 3.7? Let us know. in the chat, let us know in this poll so we can have a good data set going into these inflation numbers. And of course, so that we can have a much more dynamic discussion with respect to inflation. So really, shelter is going to be the main key takeaway from this report. So because if you take a look at the previous report, we already know. So what is the one thing that we are already known that it is going to be up month over month? What is the one thing that we know for a fact that the possibility for it being up month over month in January is very high? What is that one thing? What is that one commodity that we know that it's going to be up in the month of January? Let me know. Let me know in the live chat because I want this to be a little bit more engaging. I want you guys to participate. And this is one way for me to also check who's been keeping up with our videos, who's been keeping up with a lot of our content. So let me know in the live chat, what is the one thing that we know of, for a fact that it's going to be up in the month of January, considering that we talked about it in our inflation video. And we'll take a look at some of these stocks here like IWM, ICP, and Shopify and all these companies in just a minute. Yeah, we're going to break down Bitcoin and crypto as well in just a minute. So supposedly it was on the BLS report side for a few minutes. Haven't seen it myself. Interesting. Okay. Yeah, I doubt that BLS is going to do that. Yes, so oil, energy, you guys are absolutely right. So energy prices were up in the month of January. So crude oil, we talked about it, in our inflation video, that in the month of January, crude oil was up a little bit over 6%. So, there's a very high chance that energy prices were up. Crude oil, fuel oil, gasoline, all these prices in the inflation report are going to show us that increase. And then, of course, it's going to boil down to food and shelter, transportation services, insurance costs, apparel, used cars, new cars, all these different categories, which are really going to drive core inflation. And that's really what's going to be dictating where the markets go. Because at the end of the day, core inflation dictates interest rate expectations, which dictates where the markets are going to be, how the reaction is going to be. Okay, so let's break down IWM. So we talked about IWM in one of my previous videos. I'm planning to dollar cost average more into this. It was up 1.8% yesterday. So that's actually a lot of outperformance from small caps. That's quite interesting. If you take a look on the daily time frame, a very, very nice move to the upside. I actually didn't realize that it was up that much yesterday on the back of markets pulling back, because S&P 500 was down. It was down 10 basis points. NASDAQ was down lower, 30 basis points, and IWM actually rallied over 1.8%. So that's actually yesterday, surprisingly, my portfolio held up because PayPal had a very strong day. It was up 2%. Enphase had a very strong day. It was up almost 6%. At one point, it was up even higher. And then IWM, 3 of the positions that I'm in and I'm currently building were up substantially, right? So it was actually quite a reasonable day. One ETF that I'm actually planning on picking up sometime this week is going to be either IBIT or FBTC. I've been meaning to buy IBIT. I wanted to buy the iShares Bitcoin Trust the day they IPO'd. I waited a little longer, but they weren't listed on Fidelity. For some reason, maybe because it's the issuer, this is BlackRock, and they want to push their own Bitcoin ETF, which is FBTC. That's the Fidelity Wise Origin Bitcoin Fund. So this is the one that I was able to find on Fidelity, but not the IBIT, which is BlackRock. But either way, these are spot Bitcoin ETFs that are going to be tracking Bitcoin's price very, very closely. They're highly correlated. So this is one of those ETFs where I will be looking at, sometime this week or going into next week as well. Because, I had exposure in Mara for the longest time. I was able to eke out profits on Mara. I've traded this stock multiple times. And but now it's like incredibly volatile. It's a crypto miner. I'd much rather have exposure in a spot Bitcoin ETF than actually hold a crypto miner that is incredibly volatile. So even though Mara, Riot, like all these crypto miners are not bad, it's just that depends on your risk tolerance and your tolerance for volatility. If it's really high, then by all means, these are potential opportunities to get exposure into crypto. But if you're looking for something more stable, more safe, then of course the spot Bitcoin ETF are worth considering because of their less volatile nature and the way just they're constructed. So those would be a couple that I am looking into. Realty Income Corp, is it tied to dollar cost average? So IWM or VBK? let's just quickly go over that. Why would you buy the ETF and not the Bitcoin itself? So I actually don't mind buying Bitcoin either. Earlier, the reason why I was not able to buy Bitcoin or didn't really want to buy Bitcoin in the first place was because of the jurisdiction. Like, since I've actually moved and Dubai is like far more open and free with respect to Bitcoin, so I actually don't mind owning Bitcoin directly. But since there is a spot Bitcoin ETF, then having some exposure there, and of course also going after direct Bitcoin is also not a bad potential opportunity. So you're right. I mean, I would consider both. There's nothing wrong with owning Bitcoin. It just obviously depends on your, investing strategy as well. So VBK is Vanguard Small Growth ETF. Yeah, that's also good. It's probably going to be the same thing. Tracks the Russell 2000. It's a Vanguard ETF. The only thing I would watch for is the low liquidity. It's only got 300,000, 400,000 shares traded every single day versus IWM, which is, a lot more heavily traded. We got 43 million shares versus VBK, which is only 300,000. So liquidity is the only issue, and the spreads might be wider. So that's something to keep in mind. But I don't think VBK is a bad option either. It's Vanguard. Vanguard's a very good, renowned issuer for ETFs. But like I said, the only problem is going to be the liquidity. So David, Realty Income Corp, yes, it's just been dropping heavily. It's come down from its highs of well over $60, $59, down 12%. Oversold on the RSI and the MACD, and of course, been aggressively selling off. So I don't mind dollar cost averaging here. I would much prefer in the 40s. So if it does dip below, $50, comes down to maybe high 40s, mid 40s, I don't mind dollar cost averaging at those levels. My last big purchase on O was, of course, I've bought a little bit here and there, but my last big purchase was on the drop here back in November when I picked up in the mid 40s. Of course, it did rally 29, 30%, and of course, it's given back some of those profits down about 12%. Okay, so Prerit, Caddy, hypothetically, if the markets were to crash, what would you do? What would be your game plan? What is going to be your strategy if the market tanks? Okay, that's a great question. Those are all fantastic questions. So right now, what I'm doing as the markets continue to rip higher and higher is quite literally nothing. Okay, I'm just sitting back, enjoying the gains, and at the same time selling calls on Amazon, calls on Enphase. We'll be selling calls on Tesla, just selling calls and hedging, right? Hedging and de-risking a little bit. So if I do feel like there's opportunity for me to rebalance the portfolio and raise some cash, I'm doing that, right? Not aggressively buying at the moment, right? So this is not a market where I feel one can be aggressive in dollar cost averaging or buying. As Professor Demodron also mentioned, and he and I are on the same exact page, and I've been talking about this for weeks now, but his video came out 4 days ago, where he talked about the markets are overpriced by at least 9 to 10%. Fully agree, fully on board that yes, the markets indeed seem to be overpriced. And this is all on a relative basis, right? 9%, 10% overvalued to what? What is it overvalued against, right? There has to be some metric. There has to be better opportunities for us to say that, okay, one thing is overvalued compared to the other. And if you take a look at the earnings yield on the S&P 500 versus the earnings yield versus the yield on the 10-year treasuries, they're almost comparable. One could even argue that the 10-year treasuries are risk-free. So on a risk-adjusted basis, the treasuries actually do offer better opportunity than the S&P 500 for that example. So in this market environment, obviously volatility is low, market breadth is very concentrated in just a select few companies, and we're just ripping to new all-time highs. So I'm just sitting back, right? I'm not dollar cost averaging. Now, the moment the market starts to roll over, we're looking at 5, 7, 8, 10% drawdowns in the S&P or the NASDAQ. Simple. Selling puts, dollar cost averaging, and buying aggressively once again. And we'll also be looking at some tactical trades on some of the more levered ETFs that I've already discussed in our Discord and our private members only videos. Because one of the ones that I was looking at is FNGU. Right? And this is only for super riskier sort of trades. So you got to be super careful with these. But FNGU, for example, from its January of last year, from literally if you go back 1 year ago, it was at $37. And since then, it's rallied almost 800%, right? Even if you look at certain dips, right? If you look at certain dips here, so from back in October of last year, just about 4 or 5 months ago, from those levels, it's rallied 160%. So, these are very tactical trades. You have to precisely time and understand your risk and reward, and what's the ideal place to be getting in. Because if you do have a very poor entry, you can really get destroyed in levered ETFs. So it's a very precise, very carefully constructed plan of proper risk management that we need to understand and execute. So FNGU, TQQQ, in fact, I had a trade on TQQQ that worked out really well. Had I held on a little bit longer, of course, the profits would have been more. But again, in trading, you can never get into this mindset of could have, should have, would have, because you could always do something that you didn't do, right? In hindsight, everything looks perfect. But in the moment, everything is not. Everything, your mind playing games with you, your emotions come in the way. So that's why it's so important to kind of just trade the plan that you have in place and just simply focus on risk management. I'd much rather take a little bit profits off the table than watch that profit turn into a loss and then just for it to continue to turn into a bigger and bigger loss. What's that saying in the markets, right? In the markets, it's okay to be wrong, but it's not okay. Finish this quote for me. In trading, it's okay to be wrong, but it's not okay, blank. What is that blank? Let me see who's got this quote. Who's going to finish this for me? Kevin says, you always sell early. Yeah, man, that's one of the problems I have. That's one of the things that I am looking to work on. And again, I'm not a perfect trader, but everyone's got their weaknesses, but I'd much rather lock in profit. Nobody ever went broke locking in profit. So it is what it is. But finish this quote for me, right? It's okay to be wrong. In trading in the markets, it's okay to be wrong. It's not okay to Kevin got it. Stay wrong, right? Exactly. It's not okay to stay wrong. So it's very important to kind of recognize when you are indeed not on the right side of the trade and to cut your losses or to accept the fact that the markets are going against you and you have to take that hit and move on. And there's a lot of opportunities in the markets. Just because you're, let's say, down on a stock doesn't mean you have to make all that back in that same stock. There's plenty of other opportunities out there. And I've kind of learned some of the hard lessons by losing money. That's what I put on my Instagram today as well. Investing is just more than about making money. It's a lot more than just about making money. It teaches you a lot about discipline, teaches you a lot about patience, teaches you a lot about sacrifice. It teaches you a lot about yourself. You truly discover how you behave when you are under stress, under fear of a loss, especially when it comes to money. Oh God, Dan. Hilarious. Okay. Folks, please do participate in the poll. Do vote. 232 votes right now. I'm sure we can get up to at least 1,000 before the inflation numbers come out in 30 minutes. Now 30 minutes, since I've been super early. But yeah, let us know what you think about core inflation. Are you expecting it to be above 3.7, below 3.7, or at 3.7? Can you take a look at ACLS last earnings and overall situation with this company? Thanks. So yes, ICP. I'll take a look at ICP first, and then we'll take a look at ACLS. So ICP, is this a token? I'm not going over crypto tokens, guys. I'm not going over tokens for all of, because honestly, my analysis wouldn't be helpful. My analysis would be, very helpful when it comes to individual stocks, fixed income, which is bond market. But when it comes to crypto tokens, I'm not the person. I'm not the guy to be talking about crypto tokens because I have no understanding of that. So I'll be very honest. I can give you some technical analysis on where the support resistance is, but then when it comes to the supply or what's the potential for this project, no idea. I'll have to read up more on these crypto tokens, but let's just go over ACLS first. They reported their earnings and they were selling off, of course. So they were down and they got picked right back up. Looks like they did beat on EPS and a huge beat on revenue as well, 310 million. And, when it comes to XLS, I think the company is very profitable, very, very consistent revenue growth, profitable earnings. When you look at the balance sheet, I think is also pretty solid. There we go. We got a negative net debt, negative $460 million. Cash flow wise, we're looking at very positive, increasing free cash flow. That's, again, good. And then if you take a look at the balance sheet, income statement, again, profitable numbers across the board, pretty good margins. We're looking at 21% return on assets, 32% return on equity, 30% return on invested capital, 44% gross margins. And then the valuation wise, it is looking at 17 times earnings, a little over 3 times sales, and just under 5 times price to book. We don't have a price to cash flow. If you take a look at free cash flow here, we're looking at Okay, 2023 cash flows still need to be updated. But 2022 we're just under 200 million, and the valuation right now is 4 billion. So if you do 4,000 divided by 200, we're looking at 20 times cash flow. 20 times cash flow is actually not bad for a company. 16 and a half times earnings. And then we got pretty good balance sheet, quick ratio, current ratio, also solid. So this is a stock that actually is good. I liked it. I like this company for fundamentally speaking. Everything kind of checks the boxes. So yeah, support level is going to stay up roughly in the 106 range for XLS. Clear, secure stock. Not the technology of ICP. Okay, fine. I'll just quickly go over the technical analysis on ICP here. I have no idea what this is. Okay, so looks like market cap wise. I hope I have the right one though. That's all I want to make sure that I've got the right one. Okay, looks like this is it. ICP symmetrical triangle formation a little bit. So we got these lower highs and we've got these higher lows over here. So it is looking like it's going to be getting ready for a potential breakout here fairly soon. I would watch this resistance very carefully. It's going to be 13,637. A couple of times it's gone rejected here. Then of course another time over here. And then more recently it's starting to get rejected here as well. So if we actually do get a nice breakout beyond this 13,637 level, then we'll be watching this at 1515. And then of course beyond that, of course, sky's the limit to as much as 16, 17 levels. But this is the symmetrical triangle formation. Very, very quick that I wanted to go over. Where if there is a potential breakout, then watch 15 to 16 levels on ICP. Okay. All right. So Montrose, talking about hard lessons, what has been your hardest lesson or trade to investment didn't go your way? I would say like over trading has been one of the biggest things. Over trading and revenge trading, right? So this has been one of the biggest challenges because I remember when I was first getting started back in well, it's been almost 10 years since I've been investing. So I got started when I was 18, but I was trading a lot in my 20s, in my early 20s. And when I was first trading, I used to trade, let's say, every morning, scan the markets, couple hours. And the hardest lesson was if the first couple of trades didn't go my way, like if I was actually, let's say, down, I'd try to make it all back in the next hour, right? And those are some of the most beginner-friendly mistakes you'll ever make because as a beginner, you obviously emotions get the best of you. And once you're down on the day, you already start to feel, all these emotions and you want to make it all back. And you start sizing up, you start taking on more risk. And that kind of puts you in a much bigger hole at the end of the day. And that's why it was so important to have structure in place, right? Discipline is so important because not every day is going to be your day when it comes to trading and investing. And you have to be accepting of that, right? You have to accept the fact that not every day you're going to win, right? Some days are going to be worse than others. Some days are going to be much better than others. So you have to have a structure in place. And the sooner you understand that, the sooner you realize that there are going to be losses. It's part of the game and you can't force anything in the market. And you need to just let things go for that particular day or for that particular trade. The better off you're going to be long term. Because in trading, one of the hardest lessons I've learned is it's all about capital preservation. The more you can preserve your capital, the more chances you can give yourself to be successful over time. Because markets are going to give you opportunities. But if you are already out of the game, you can't take advantage of those opportunities. So our goal is to always stay in the game long enough so we can take advantage of when the opportunities are there. So many times I was out of capital. And this has happened in my early days when I was already done for the day and then an opportunity comes around. It's a clear, perfect trade setup. I'm not able to take it because of lack of capital, for whatever reasons. So it's so important to kind of stay in the game so that you can take advantage of it. Anyway. All right. So what would be my fair value on ACLS? I don't understand why this company sold off aggressively recently. So I think it could be guidance. It could be a lot of different reasons. I'll have to do more research on that to kind of give you a clear answer, but we can take a look at it in a separate, more dedicated video on ACLS. So now less than 30 minutes left, folks, for inflation numbers, for CPI numbers to come out. What is everyone's expectations? What is everyone's expectations for the market? Let me know in the live chat. Type 1 if you believe the markets are going to rip higher on this inflation print and there's going to be a positive reaction. Type 2 if you believe the markets are going to tank after the inflation numbers come out. So 1 for markets rally, 2 for markets tanking. Type 1 or 2. What are we thinking? What is everyone expecting for the market's reaction to be? Let us know so we can get a good consensus view of where everyone's kind of positioned. Not where you want the markets to go, but where you expect the markets to go. Okay. Of course, we have placed bets, whether it's options or individual stocks going into this print. But really, where do you expect the markets to be after the numbers come out? So I'm seeing a lot of ones, a couple of twos. More twos are coming in. Okay. I feel like so far it's pretty balanced. So Jakish, your views on gold, silver, and dollar index. So gold and silver, I've just been dollar cost averaging. Like every opportunity that I do get, I try to pick up more gold. I've been told to buy more silver as well. But the dollar index, if it starts moving higher, of course, it's not going to be great news for the market, because a lot of big tech, Magnificent Seven companies kind of trade off of the three trifecta we've talked about: the yields, the crude oil prices, and of course the dollar index. Bears are going to get roasted again. Bulls got this. So flat, Kevin says, seen a couple ones. Lots of twos are now coming in as well. Can you see the chart of AMD? Should I hold? I bought it 175, Tian says. So 175 is actually a very high price, Tian. I'm trying to get a sense of whether this was a trade for you or whether this was a long-term investment, because 175 was quite literally near the all-time highs after it had rallied over 100%. So I would watch 164, 165 as a support. There is some symmetrical triangle formation for AMD. So what we can see here is lower highs and of course these higher lows for advanced micro devices. So lots of consolidation in that symmetrical triangle. But of course, if we do see a breakdown below 164, then 150s is going to be that next support level to watch for advanced micro devices. So that's something to keep in mind. But again, 175 is actually a pretty high price, I think. Okay, gold go down. I think the good reading is already priced in. We only have downside from here. Sell the news maybe. Gilbert says, take a look at thoughts on Roku. I'll take a look at Roku as well. Unity stock, shop is down. Have been an investor into Union Pacific. Is it worth now to put in some dry powder into the stock or do it slowly? All right, so let's break it down one by one. We'll start with Shopify. And Shopify down about 8.5% on the back of earnings, I'm assuming. There we go. So adjusted Q4 earnings, revenue climbs, issues first quarter revenue outlook. So 2.14 billion, that's up from 1.74. Earnings came in at 34 cents, up from 7 cents. It's a huge increase year over year. And that's up from 30 cents analyst expectations. And then revenue was expected at 2.07 billion. So beat on revenue, beat on EPS. And for the first quarter, grow in the low 20s% rate year over year basis. Analysts were expecting revenues of $1.81 billion. So I believe that might be the guidance from the company that may have come in a little bit shorter than what the expectations were. So yeah, that could be one of the reasons. If you take a look at first quarter 23 earnings, or revenues rather, we looked at revenues period ending December. This is the one. So 1.5 billion was the revenue reported in the first quarter of 23. So 1.5, we multiply this by 1.2. We're looking at revenues of 1.8 billion. Okay, so 1.8 billion is what they guided for roughly. And analysts were expecting 1.81 billion. So a small miss on guidance, I believe. And the stock's down 8%. But one of the good things about Shopify is profitability. They're finally turning the corner towards profitability. And that's exactly what Wall Street wants to see. So that's that. And then so let's just go over to Roku. We'll take a look at Roku and Unity Software stock as well. So Roku here. So profitability is still an issue for Roku, I think. Still struggling, not profitable. I think this is still one of Cathie Wood's big stocks, right? I think she's still very much long on Roku, and I think it's part of her flagship funds. Could be wrong, but I think it is. And she sees like a lot of potential for streaming on-demand television. So, lots of consolidation. I would say a big resistance for Roku here at the $107, $108 per share level. And then I'll be watching a support here at close to $75, $76. So very strong support there. Resistance at $107. Yes, Shia, we already went over InMode. Sam, we went over InMode earlier. So if you want to go back and watch the analysis on InMode, we talked about it at quite some length. Definitely do check out before coming back to the live session, but we did talk about InMode earlier. Unity Software. I think Unity is also struggling with profitability. Very much range bound at the moment. So on an annual basis, it continues to generate losses after losses. And this is the overall technical analysis where it just continues to consolidate sideways. So $43, big resistance here for Unity Software. And this right here is going to be that support. So lots of consolidation in that range. Support level is going to stay put at $24.50 with a resistance at $43. And it's not profitable yet, so we're going to have to wait and see how the company does over the course of the next couple of quarters, whether there is any guidance for profitability here. Yes, SoFi, we'll take a look. Food prices to come down. So one of the things about inflation here is that if you come back and you look at charts, so this is what inflation looks like right now, right? It's been more or less stable. So this is all items CPI, right? It's basically at the same level, if not higher, compared to June of 23. A lot of that has come from energy, which since June of 22 has just been selling off. It's come down. It actually went into deflation. And then food prices, so food at home, has also been coming down. So that's good. Since August of 22, I mean, it's come down from, well over 13.5% to 1.3% on a year-over-year basis. Shelter prices are also rolling over, so that's good. We've kind of been leveling off a little bit, but we want to see a bigger drawdown in shelter into a point where if there is deflation, that's perfect. That's even better if rents are going down. And if you take a look at CPI price index Google data, I mean, that's one of the best places to look at overall prices and what's the overall trend for CPI. And what you'll notice is that the prices in general are starting to level off. So this is going back as far as 1915s. And if you zoom in a little bit, what you'll notice is the index since September has just been coming down slowly and steadily. It's come down from like 307.79 to now at 306.75. So what does that tell us? That tells us that collectively, prices are now indeed coming down. It's not just the rate of inflation that's coming down. Prices are also coming down since September of last year. So that's exactly what Jerome Powell, when he says the last 6 months trend is really good, you look at this trend and you look at this data, September, October, November, December, January, and February, that's 6 months that we're seeing that trend of inflation coming down. That's good. We want to see this continue. We don't want to see this to a point where it actually starts in a deflation territory where prices are going down every month. On a year-over-year basis, they've gone down. So if you come down to, let's say, February, 300.84. So if we actually dip below that 300.84 level, that's when prices are down on a year-over-year basis. That's when there's deflation. But since September, yes, there is deflation. We're still up on a year-over-year basis because compared to last February, prices are still up, right? But compared to September, prices are down. So that's the last 6 months of trend. That's the last 1 year trend. And really what the Federal Reserve wants to see is some leveling off in these two types of data. and for us to consistently like have a baseline of 2% over time. So that is where we are. Luis Sanchez, thank you so much for the donation. I really appreciate it. CSCO, I believe that is going to be Cisco. And Cisco here from an investment standpoint, let's take a quick look. So 3% dividend yield, it's a pretty good dividend payer. We got very solid revenues and earnings. So fantastic fundamentals there. Free cash flow, also very solid. You know, on an annual basis, it's been pretty consistent and stable. Balance sheet wise, got lots of net debt. In other words, negative net debt. So we got more cash than debt on the balance sheet. That's also fantastic. Pretty decent to low valuation. I actually like Cisco here. Not bad because we've got pretty good balance sheet, excellent margins, good revenue, you know, good valuation as well. So not super expensive or overpriced. So if you take a look at the weekly time frame for Cisco, the only thing is that it hasn't really gone anywhere since 2019. So it's been well over 5 years that Cisco has not really gone anywhere in terms of those gains. So this is a range within which Cisco seems to be trading at, you know, a much broader range. It's going to be this level. Lots of consolidation in between that range. So $39, $40 is perhaps going to be ideal for Cisco. So this right here is going to be that level to keep in mind for Cisco, and resistance is going to be at $58, $59 per share. So that's going to be that resistance, that target up to $64, $65 for the company. Okay, folks, we've got 15 minutes until inflation numbers come out. Participate in the poll. We've got 415 votes. I'm positive, I'm confident we can get this number up to at least 1,000. We need 500 more people to participate in the poll here. So definitely do participate in the poll. So Tawfiq, thank you so much. By the way, guys, you can ask stock related questions with the donations if you want a full detailed analysis of the companies that we're going over. I'll go over the fundamentals fairly quickly, spend a couple minutes, go over the technicals, go over the support resistances, how's the balance sheet, how's the valuation, everything if you want me to go over that. So Taufik, I hope I'm pronouncing your name the right way. Thank you so much for that. I really appreciate that. QuantumScape. Profitability is going to be an issue for QuantumScape because it's not a profitable company. So that is something to keep in mind, but it's got lots of potential, right? So we've got, you know, little to no revenues, it seems like. It's still a concept. It's still a story. I feel like it still might be pre-revenue because I remember we discussed this back in 2020, 2021 when it was first going public back in 2020. It skyrocketed from all the way $10 to like 122 in just a matter of a few weeks. I mean, there was so much hype around QuantumScape, 1,000% rally, and of course, it was all based on nothing. And the stock prices, of course, since plummeted over 95%. So I'd be super careful with companies like these that are pre-revenue, that are not profitable. You know, you want to have, at least in my opinion, you want to have bulk of your portfolio and well-established, good, profitable, high-quality businesses generating good cash flow. Because at the end of the day, that's really what's going to matter. These companies are fine as long as they belong to a very small percentage of your overall portfolio. And these are mostly for, let's say, unless you have very in-depth analysis and expertise in these areas and you believe that, okay, QuantumScape is doing something that's completely unique that nobody else is doing, and it's got so much potential that it's still yet to harness all of that, then, okay, maybe you've got an edge with that company that you can see the future for. But until then, I think it's really important that you kind of let the company talk, let the company actually show with their actions that they're actually worth investing in, okay? So let the companies actually prove to you that they're worth investing in, right? Let them prove that these are our numbers, these are the earnings, these are the revenues, this is what we're doing, and then make a decision, right? You can always build your confidence up over time. Instead of going all in and then kind of backtracing, you can start small and then increase over time. So resistance is going to be $13.64, support at $5. There is going to be another resistance to watch out for here at $9.75. Very quick take on the balance sheet here. Looks like the company does have more cash than debt. So net debt is negative. So there's not a lot of bankruptcy risk here, at least not right now. Free cash flow wise, negative free cash flows. We got little to no valuations here. And there's literally no profitability expectations, no revenue expectations here. So for QuantumScape, it would be a hard pass. It would only be a tradable stock, and $5 is going to be that support. Okay. So 457, 460 votes here, folks. Definitely do participate. We've got inflation numbers coming out in under 10 minutes. I will be doing a quick audio check and we should be all set here. The markets pre-market, of course, are selling off on the back of these expected inflation numbers, and the market's expectations for interest rates have also been pushed out a little bit. So earlier we were expecting 6 to as many as 7 rate cuts into 2024. Now the market's pricing in 5. And I wouldn't be surprised if that number goes down to 4, possibly even down to 3. All of that depends on the inflation numbers we're going to get in 10 minutes. So again, make sure that you drop a like, subscribe to the channel if you haven't already. I would really appreciate that. And also do participate in the poll so that we can get a good data set of what core inflation expectations are. Yes, Calvin, thank you for reminding everyone. Slap the like button, everyone. Just absolutely slap it so that we can get this live stream out to more and more people. More and more people can join us and the algorithm can do its thing. So I would really appreciate that. SQM, a good swing trade. Let's take a quick look here before we dive into our inflation numbers. Okay, so SQM here. I feel like it could be a potential nice swing trade here. I mean, our side looks good. MACD on the verge of crossing over that signal line. The price itself, it's been selling off aggressively, so there's potential upside here. And yeah, I mean, I like it from a technical perspective only. And, we're kind of looking at the support for SQM. By the way, I have no idea what this company is. I'm purely looking at it from a technical perspective. So this is where the previous support was. Seems to be a little bit more volatile. So even if the momentum is there, there's not a clean follow through on the price action, because you can see that, even last time it's not like it, went down and then went straight back up. It went down and took some time to kind of slowly and steadily kind of build its way back up to actually move back up to 60s, mid 60s from $40. So there's going to be some volatility, I feel like, because it's a commodity stock. I feel like it's a commodity stock, right? Yeah, chemical industries, production distribution of fertilizers, potassium nitrate, iodine, lithium chemicals. So commodity stocks definitely going to be super volatile. And that's really what we have seen. Not a very clean follow through. Might be a dividend stock as well. Yeah, almost 8% dividend, right? So 7.8% dividend is what it pays. Okay, so we've got under 9 minutes for inflation numbers. Folks, everyone, I want everyone to participate. Do a couple things. Number one, drop a like on this live stream if you haven't already, right? That would really help us out. And then, of course, participate in the poll as well, right? So core CPI below, at, or above 3.7%. So folks, if you keep asking about these crypto tokens and these crypto stuff, like, this is not the chat. This is really not the chat for crypto. You can go find a few crypto channels. We're only talking about high quality investable companies, businesses that are profitable, generating good cash flow, good balance sheets. And for every now and then, we may take a look at some speculative stocks that have potential, but we're not talking about crypto tokens here. So, okay, how is Hood for long term? So Robinhood has a lot of issues of its own. I feel like it's been very range bound for the longest part. I think it's not really gone anywhere. Mostly consolidating sideways. Lots of support here at around 777. Kind of coming up to that resistance again at 1275, 1280. So that's going to be that resistance to watch. And if you do get a breakout, of course, there's lots of potential for Robinhood to trade back up to 16s. So that's going to be that next target, that next resistance level to watch. But of course, support level is going to stay put at 777. So InMode, Realty Income Corp, all of these companies we've talked about already, folks. Rahul, Janesh, I would really appreciate if you go back, watch the live stream. We've covered InMode, we've covered, Realty Income Corp, we've covered DocuSign, we've covered Roku, we've covered lots of companies today in the last hour or so that have been live, a little bit earlier than I expected to be. So we've already covered a lot of these companies. PERI, very quickly going over that because we still have a few minutes until inflation numbers come out. So Peri Networks, profitable, good revenue, increasing revenue on an annual basis. I don't think the balance sheet is going to be super great on this network companies because they are usually heavily indebted. Could be wrong, but let me take a look at the balance sheet here. Wow, okay, so this company does have more cash than debt on the balance sheet. I was wrong. So $466 million of negative net debt. That's exactly what we want to see. And when it comes to the balance sheet, the valuation, it's actually quite reasonable. 10 times earnings, over 8 times cash flow, a little over 1.6 times sales. So I would say this is actually quite reasonable valuation for Peri Networks. Earnings expectations wise, looking at a little bit of a drop in 2024, then an acceleration back in 2025. And revenue expected to keep growing up to almost $1 billion for this company. So very strong support here at 1650. And then perhaps even another support, I would say modest, reasonable support here in the $21, $22 range. And a resistance back up to this $32, $33 range for this stock. It's a little bit of a downtrending channel. So lower highs and lower lows right now. So this right here is the downtrending channel for Peri Networks. All right, everyone. So it is time. It is time for those inflation numbers and less than 5 minutes left. So what I'll do is I'll keep the S&P 500 at the top left. Actually, I'll move the SPY here. We are on the 1 minute chart, so we'll be able to see the market's reaction live. So SPY is going to be here. QQQs are going to be down here, bottom right, on the 1 minute chart. And we'll put the 10-year yields behind me on the bottom left. And then we'll put the report over there on the bottom, on the top left. Do participate, everyone. We got 540 votes. I'm sure we can get up to at least 600 votes here. So 60 more votes needed. Everyone, join, participate, drop a like, do all that good stuff. Kadi, why ignoring industrials? Not really ignoring industrials. It's just it depends on what your strategy is. If industrials is where you want to be, then by all means, I'm happy to cover that for you. But for me, I think it's mostly bin tech, and then of course a little bit of exposure in other industries, whether it's real estate, REITs, or energy, renewable energy, so, or even financials or fintech. But yeah, for industrials, consumer staples, defensives, those are great sectors too. I mean, there's a lot of opportunity there, but it just depends on what the strategy is, how defensive you really want to be in your portfolio construction. So how close are we to uninverting? Very close, I would say, negative 30 basis points. So we got another 30 basis points, or 0.3% to go for the yield curves to start to uninvert and for the spreads to turn positive again. Okay, 2 more minutes, folks. We're going to do a quick audio check here, and we are going to be live. Let me know if the audio is good, okay?
The most votes, not the... With one other piece, which is the data and the idea of spoilers. So one of the great conundrums of the idea of a third-party candidate has always been that they're going to act as a spoiler, if you will, for one party or the other. As you looked at the data this time, and I would imagine it depends on who you run, who does it spoil?
Good. Is the audio good? Just want to make sure it's good. Perfect, guys. 2 minutes left, about 120 seconds until the January inflation report. Super important, always an important print. The market's reaction, we'll see, kind of dissect the inflation report. I'm going to end the poll. Come on, 11 more votes needed, 11. We can get up to 600 here. 10 more votes. Participate. We can get up to 600 votes here, everyone. 45% people expect that it's going to be below 3.7. Core inflation, so almost half of you expect core inflation to be under 3.7%. That's going to be a huge print here because it's going to be lower from the prior number of 3.9. Markets could actually rip on that news. One more vote and we're up to 600. There we go. Boom, 603. We're good to go. 1 minute left for inflation numbers. Let's go, let's go, let's go. At 3.7, 27%, and 28% expecting above 3.7%. Boom, here we go. The polls are closed. Majority of you, almost half of you expecting it to be below 3.7. We'll find out in 30 seconds with the markets here.
All right, welcome back to Squawk Box, everybody. This is CNBC, and we are just a few seconds away from January CPI data. We've been watching the futures ahead of that. You'll see right now the Dow futures are down by about 32 points. S&P futures are off by 15. The NASDAQ indicated off by triple digits, a loss of about 108 right now, and that's where we've seen things, at least for the NASDAQ, all morning. Also been keeping an eye on what to expect from treasuries, and worth checking in ahead of this CPI number. You'll see right now the 10-year is now yielding 4.15%. The 2 years at 4.45. Again, expectations for CPI, I think, are up by about 0.2%. But people watching this inflationary number that the Fed's going to be watching very closely as well. Get some hints of what they might want to do next. Rick Santelli is standing by at the CME in Chicago. And Rick, numbers, please.
Yes, January consumer price index out in a few seconds. All yields are a bit lower, and here we're hitting the wires. Headline number expected to be up 0.2%, is up 0.3%. That's the hottest since SEP of 23 when it was up 0.4%. Strip out food and energy, even hotter, up 0.4%. Also 1/10 hotter than expected, up 0.4%. Well, you equal that going to May of last year. You surpass it going to April of last year when it was up 0.5. The year-over-year numbers also hotter, 3.1 on headline year-over-year. We were expecting 2.9, but did make progress versus the rearview mirror, which stands at 3.4. Now, if you consider 3.1, we've already been there. We were there in November of last year, and we were at 3.0 in June of last year. Finally, CPI year-over-year core, I think one of the ones I'm paying most attention to, 3.9%, exactly as the recent month, December 3.9, 0.2 hotter than expected, and 3.9 is the smallest year-over-year change since it was 3.8 in May of 21. Now, I don't always hit some of these indices, but I think it's important to hit it today. If you look at the headline actual index for CPI, it's 308.417, which means that if you go back to 1913, we've never had this index higher than it is right there. And if you strip out food and energy and you look at CPI core, the actual index, this one is seasonally adjusted. The headline is not seasonally adjusted. This one comes in at 314.43, by far the biggest it's ever been, going back to record keeping in 1957. So these numbers are hot. Interest rates have zoomed up. These are now representing some of the highest yields of the year by far. 4.28 in a 10-year. We see pre-opening equities, of course, moving lower. And none of this should be shocking. And this is a cautionary tale for those, especially Fed speak, continually annualizing 3 and 6 months.
Yeah, there were some problems with my connection. Can you guys hear me okay? Okay, can you guys hear me now? It should be good. Yeah, there were some problems with my connection, but just let me know in the live chat if my audio video is working again. Okay, it's back now. Perfect. Okay, so as I was saying, I don't know how much you guys caught what I was saying earlier, but the bottom line is that the markets are right or correct in their assessment that this is not a good print. I mean, we had 0.4% on core month over month and 3.9% on a year-over-year basis, is almost twice as much as the Fed's target, and markets expecting way too much for rate cuts. I mean, 6 to 7 rate cuts over the next 12 months is definitely too much. And the markets are certainly opening themselves up, unfortunately, to a unpleasant surprise. And I mean, Nasdaq's getting destroyed here, 1.6% lower. We've got Nvidia down 1.5%, Tesla's down 2.5%, Amazon's down 1.8%, Apple's down 1%. Enphase is down a little bit over 4.5% to $123. It's been quite interesting with what's happened with Enphase over the last couple of days. But the bottom line is this is not a print that the markets wanted to see, bottom line. So yeah, I mean, inflation's here to stay, looks like it. And again, you know, we got to be ready with cash. That's exactly why I keep mentioning that the risk reward is not that favorable on the long side. And that's exactly why I'm kind of hedged. My Enphase calls are going to print today. Amazon calls are going to print today. They'll be looking at closing them out. Look at Amazon. Amazon's under 170 now. Incredible. Down almost 2%. So, yeah, markets crash. Feeds also crashed a little bit. Anyway, so that's going to be it for today, everyone. Of course, I will be spending some time in our Discord going over some specific analysis and my breakdown of inflation in a more detailed view, and kind of what next steps and some actionable stuff that we can focus on. In our Discord, I'll be sharing in our text updates and some alerts that will be going out. So again, hope you all enjoyed this live stream. I know there was a little bit of a connection issue here, but thanks again for joining us. Bottom line is inflation certainly coming in much hotter than what the expectations were. That's exactly why it's so important for us to be ready with cash, gather funds, have some dry powder ready for when the markets do roll over. We are ready to hedge with selling covered calls, selling puts even, and the markets do start coming down, and then simply, you know, dollar cost average aggressively start to put some money to work, as we're seeing that better opportunities and the better risk reward trade-offs in the market. So again, if you want to join, link's going to be down below if you want to take advantage of that 16% annual discount for our Patreon and our Discord. I will be spending some time in our Discord here now. Thank you so much for joining. Make sure that you drop a like, subscribe to the channel, and happy investing. And I'll see you all in the next video. Would you hedge today by selling Amazon covered call? So Vault, I already did. I already have 2 covered calls on Amazon at 170 strike. Surprise. Luckily, Amazon's below 170 right now, pre-market 169. So it looks like I'll be able to close that one out, but not right now because the expiration's in March. So I still have a little bit of time for Amazon to stay below 170, so I can keep my shares and also close out my covered call for a good profit. So